Good morning, good afternoon, and good evening, traders. So, today I just want to give you a bit of an update. I only took one position this week, and that was on the euro dollar. It did, however, result in a loss of 103 Rand 45 cents. You will see that the account balance is less than it was last week. And this is overall still my bias. I'm still looking for the euro to build a bit of momentum against the dollar. I'm still looking for a stronger euro moving forward. So just to kind of see if we have what it takes to kind of build further up. Now, if we go over into the dollar, again, we can see that it's been fairly overextended, and this resulted in the market potentially looking to roll over to at least seeing the daily 50 over here. But as it stands, I am sitting on my hands waiting for the signal to get in. So although we have the overall bias, the analysis points us into a particular direction. Now it's a case of waiting for the signal, the pattern, the entry opportunity, the setup criteria to line up and ultimately give us the indication that it's time to get into the market. And that's one of the biggest lessons that I think you can learn. And the earlier that you're able to learn this lesson, the better it's going to be for your journey overall. And the reason I say this is because a lot of times when we enter into the markets, a lot of times when we find ourselves starting this journey, we have this idea that as soon as we're going to open our laptops, as soon as we're going to open our phones, and as soon as we're going to open the charts, we're going to find an opportunity to get in the market. And as soon as we press buy or sell, the market is immediately going to run into profit, and we're going to be able to close the position out on profit. And we will have just made several $100s within a span of a half an hour to an hour. And this is a very ambitious pipe dream, I would say, because if you have a look at this account, there's several reasons why I was only able to take one trade for this week. The biggest reason was because I was actually stranded, um, because my family and I went on holiday, and the weather was quite bad. It flooded the roads, and the road that it flooded was the only way to get out. And we were stuck there for another 2 days. The signal was also very bad due to the weather, and so I couldn't necessarily be as active in the markets as I would like to have been. But the point I'm trying to make here is that being able to sit on your hands and being able to wait for the market to come to you instead of you going to it, it's going to serve you very well down the line. You're going to start to see how account preservation plays a massive role in account growth. Because if you are able to know precisely what you're looking for and the market begins to line up according to what you need to see in order to justify an entry, then probability suddenly falls on your side. And the chances of success long term is going to be higher than it would be if you're just taking every trade that comes your way. Now, I'm not saying that you need to ignore certain setups and only focus on others. But what I am saying is that you need to apply a unique sense of discretion that you're only going to get over time, that you're only going to get as you kind of stay in this for longer and stop hopping from one strategy to another, but actually stick to one strategy and understand it to the degree that you have an idea of what the overall outcome is going to be. That the strategy that you're using does have an edge within the market that you're trading. And ultimately, if you take enough trades, you're going to end up um, with a bigger account than what you started out with. And so this is my main focus in today's session, in today's video, is to be very sensitive and to be very deliberate about identifying what positions you're taking. And so if the trade that you've just taken has stopped you out and the setup is still there and it warrants another attempt, then by all means go for it. But if the trade has stopped you out and the market is moving aggressively against you, then you need to stop and you need to reevaluate. You need to redo your analysis and see what you may have missed adjust yourself and then move accordingly. But as it stands right now, when I got stopped out of this position, I got stopped out over here. You can see that the market eventually did move further down, but yesterday we had a nice close inside, back inside of our bands, more or less closing beyond 50% of the previous candle. And we're starting to build quite a bit of momentum in this respect over here. And so the idea is that if I can get a small pullback, whether it's on the intraday time frames or whether it's on the daily time frame, if I can get a small pullback, that's going to warrant me being able to get back into this market and at least seeing myself trading it to the daily 50 as a target point, because risk to reward is not necessarily going to be um, that good if I was to target the daily 20. However, the daily 20 will be an opportunity to reevaluate the position, to manage it accordingly, to see if there's anything that I need to do, if there's anything I need to add to the position itself. And so we're always trying to stay 5 or 6 steps ahead of the market so that we can prepare ourselves for whatever may come. And this is the approach that I would encourage you to begin using in your process, in your journey, because it's going to serve you in the long term. So, guys, I really do hope that that makes sense. I really do hope um, that you're able to draw some value from today's video. And if you have any questions, please feel free to reach out to me. I'll be more than happy to assist wherever I can. For the most part, I hope that you have an awesome day. Have a brilliant weekend. And I look forward to chatting to you all soon. Up until then, keep well and bye for now.